welcome to The Powers in Your Pocket. My name is Makhaje, and if you're joining us for the first time, please subscribe to the channel. If you like what you see, if you like what you hear, please leave a comment, share, and like, right? So today, we're going to be talking about debt slash having an account slash buying on credit. South African consumers are 1.9 trillion, like 1.9 trillion rand in debt. So we need to talk about this, and we really need to fix it. So what creditors do, they lend us money, and then they charge interest on that money. So that's how they make their money. And I learned somewhere that the interest that we pay for the credits that we use, it actually steals money from our future. So I'm going to repeat that. Interest steals money from your future. And what does that mean? It means that the money that you're paying towards interest, instead of you building wealth or making money out of it, you're literally taking it out of your pocket and you're handing it over to the next person for them to make money and to be wealthy. So we basically feed a system in us having so much debt. And then the people who have debt then tend to be in this continuous struggle, and they really find themselves in a vicious cycle, whereas the people that we're paying interest towards or to are the ones who are getting wealthier and wealthier. So someone might say that it's unrealistic to live without debt. But the truth is, at some point, these products were never here. And it's not so long ago. I mean, it's before the 1950s. People, we lived without debt. I stand to be corrected about my timeline, but it's true that it's not so long ago when people lived without having to borrow money or credit, and it is possible. The trick, however, is to be able to differentiate between good debt and bad debt. So what is good debt and bad debt? Good debt is money that you use in order for you to make money or to buy assets. And remember, assets are things that you own that generate more money. So, for example, if you take a loan to start a business, for example, and you're basically going to use that money for the product that you want to sell, knowing very well you're going to get this money back very quickly, right? Also, if you're buying lifestyle assets, for example, like your home, nobody has 2 million rand lying around to buy a home, but, and we all at some point, or rather most of us, will get a mortgage loan. There's nothing wrong with that, because the property that you're buying is an asset, and the beauty about it is that it appreciates in value, right? So the same with vehicle finance. Your motor vehicle, even though you might not be, your motor vehicle for personal use, even though you're not using it to directly make money, but if it is helping you to get to work or to get to your business, it is part of the production of your income. I hope I'm clear with that one. So, and the vehicle itself is an asset, and the vehicle finance is a loan. And then there are things like student loans. The return on investment in studying, I don't even have to, you get that money back within 3 to 4 years. All the money that you use to study from grade, how many zeros are there these days? until you finish university, you get all that money back within 3 to 5 years. So it is a really good investment. So that for me, and I mean, these are my personal opinions, so please don't hold me to that. I'm just giving the knowledge that I know. That those for me are examples of good debt. You know, when you're investing in property and you've got your vehicle that helps you in the production of income, and a student loan, and maybe there are others that that I won't mention right now. So bad debt, right, is the debt that you take up for the things that are not going to make you money, right? And bad debt really feeds a lifestyle. It is so there are so many products out there and so many accounts out there that when I think about them, I just want to cry, because these are the things that just put us in this in a serious mess. And the amount of time that you commit into these products just it just shackles you, if I should put it that way, and gives so much anxiety. For example, people will take debt like to go to the Durban July, for example. Like, there's nothing wrong. I'm really not here to tell you how to spend your money or not, but I just need you to understand the impact of the choices that you make and how they just tie you down for a long time. So you take a loan for a weekend, and you end up paying for that loan over a 5-year period for something that you're not going to make money from, you know? So even for clothes, and these days you find places where you can buy food on account. It is ridiculous. But anyway, those are examples in my eyes, or my opinion, of terrible, terrible debt. If it's not making you money, then don't take it. Right. So if you understand the history of some of these products, you'll get to see that these products, when they were first introduced, they were never meant for private consumption, right? So for example, like an overdraft was solely for business. So as I mentioned earlier, you find that somebody wants to produce tomato sauce, for example. So there are costs involved in producing this tomato sauce before you can go out to market with it. So if you don't have the money, you go to a credit provider, and then they'll give you all the money that you need in order for you to produce your product. And then eventually your product hits the shelves, and then you start recovering or recouping all that money, and you still make a profit, right? But with a business, the overdraft can be paid off within a day or two, or within a month. But if you have an overdraft and your income is fixed, for example, if you don't have the money now, where are you going to get the money in future in order for you to pay that overdraft? So if you have an overdraft, for example, for 5,000 Rand, you're literally borrowing that 5,000 Rand. You're going to use it, but you have no idea how you're going to pay it back. So you literally have to wait either for a bonus or a 13th check, or now you have to start a side hustle for you to be able to pay back that overdraft. But if you don't have any of those, then you're going to have this overdraft forever and ever and ever. And remember, credit is always recuperated even at death. So all credit providers get their money no matter what, right? The next example is a credit card. I mean, the credit card was started, I remember it was like the American Express and the Diners Club if I remember correctly, because I'm using information that I learned 20 years ago in varsity, so bear with me. But I remember reading in one of the textbooks that companies would want to send some of their employees out away in business. At the time, there were no EFTs, right? So in order for them to buy, to hire a car and to buy food, to pay for the hotel, and etc., what the companies did, they would rather give this employee the company card in order for them to use the company funds instead of them using their own money and having to claim it back from the company. So that basically started that way. But with these products, at some point somebody said, let's just test the market for private consumption, And then guess what? At some point, consumer intake was way more than a company. And because of the time in which a consumer has the debt, the credit providers made more money, right? So what I mean is a company would pay off its overdraft within a week, whereas a private consumer will have that debt for maybe a year, because now you have to wait for your bonus in order for you to pay it back. And the longer you borrow money because of compound interest, the more money the credit provider makes. So these products were really not made for us. They were made for that person who, okay, I just temporarily need the money, and then because they're a business, they're going to sell something very quickly and then they pay it off so quickly. It was really just a tool to run business, not for lifestyle, not ever for lifestyle. So if you understand that, I hope when you think about your next loan or using your credit card or your overdraft, what exactly it is that you're getting yourself into, I mean, I do say the power is in your pocket, so I really want you to take control of your spending decisions and whether or not to use credit. So when the credit providers saw that your consumers having a party with these loans, then they created more products like the personal loans, the revolving loans, all of these things that you get from the bank. It's crazy, right? And we use them. And you know what they say? Wow, you qualify for this and this and that. You qualify. They make it seem like you're this great person. You're so good with your money, you're so good with it. Let's give you debt, And then once you get debt and once you get more and more credit, then you just get trapped. Then it's so difficult for you to get out of this debt in order for you to use that interest that you're paying for you to actually invest in your own assets. So basically, this interest that you're paying is an asset to somebody else, but you're just giving away your money. And that's why they say, interest is stealing money from your future, You are busy building somebody else's future by paying so much interest. So think about that. If anything, please do think about that. So the worst is that if you look at the maximum prescribed interest rates on these products, they are ridiculous. I think the last time I checked, a personal loan, you could charge like a maximum of 29%. In my next episode, I'm going to show you how interest is calculated so that you can have a clear picture of what interest does to your pocket, right? So someone might ask, so what is the solution? So there are people who actually don't have debt, who've just come out of varsity, or they just don't have debt. So please just be, just don't take the bad debt. That's my advice to you. So, but if you really do have debt right now, get rid of all the bad debt, right? And then start saving that money that you are paying towards debt, and put, here's an idea. It might work for one person, and it might not work for the next person. But then just set up a savings account for, emergencies, set up another one for holidays, set up another one for entertainment, set up another one for tires, or, something, or household, whatever. So, and have a limit for each of those accounts, and knowing that every time you use money from those accounts, you just replenish them to the limit that you've set for them. So this way, you don't have to borrow money for all of these things. You'll just have your savings to dip into when you find yourself, having to spend on any of those things, if I should put it that way. So if you need tires for your car, for example, instead of buying a tire and paying interest on the tire, you'll actually have an account for tires. So in conclusion, today's episode, I really just wanted to demonstrate that some products were really not meant for us, and it was just decided for us that these products must exist, and we use them because we think that they've always been there for us, but they were not. They were there for businesses. So please be, again, be mindful of the way you spend, and how that money is spent. So try by all means to stay away from interest. That's really all that I have for you today. This is going to be like a couple of episodes on debt, and I really want to dig deeper and drill it in. So today was really about the history of debt, and yeah, that's all that I wanted us to do, and all I want for us to do is reduce that 1.9 trillion rand. Crazy, huh? That's all for today. Please subscribe to the channel. Please reduce your debt. Please share with your friends and family. There are not enough of us talking about this, so please, the word needs to get out, right? And see you next time. And remember, the power is in your pocket.